Hindenburg Research is a US-based research team that offers services in forensic financial research, with a focus on equity, credit and derivatives analysis. Their fundamental research often includes studying and reporting on companies with accounting irregularities, unethical practices in business/related party transactions, bad management, etc. Its primary method for investment is said to be short selling. Note: short selling basically involves borrowing an asset now in order to sell it, only to buy it back at a lower price and then return the borrowed asset. The view taken basically is a bearish one. Usually they write reports on Western companies such as Nikola, Genius Brands, South Carolina Works, etc. However, on 24th of January, 2023 they wrote a report on the Adani Group. The following are some of the claims made by Hindenburg Research on Adani Group. 1. Overvalued shares. The report cites data from FactSet and Hindenburg's own analysis to claim that the Adani shares are highly overvalued by conventional metrics such as P/E ratio, price/sales ratio, and F/EBITDA. 1. Some of the extreme cases include the P/E ratio of Adani Enterprises being 42 times the industry average and the price/sales ratio of Adani Total Gas being 139.3 times the industry average of 1.0x, etc. 2. Debt-fueled business. 5 out of the 7 key listed companies mentioned have reported a current ratio less than 1. 2. This means that the total amount of current assets is less than the total amount of current liabilities in those companies. 2. This is not a healthy financial practice, as this means that the companies are unlikely to have adequate assets to pay off their liabilities in the short run. 3. Promoters pledging their stocks. This means that the promoters of the company have taken on additional debt on the basis of the shares that they own. 3. As seen above, the share prices are claimed to be already high and so is the debt. Therefore, promoters pledging stocks to take on more debt is not a healthy financial practice in such a context. 4. Doubts regarding the management team. The report claims that some members of the management have a questionable past, which includes allegations of fraud, duty evasions, scams, etc. 5. Excess promoter control of shares. It has been alleged that in addition to the already high proportion of promoter holding in shares, close to 74% in multiple cases, significant portions of the remaining public shares are also controlled by shell companies that have ties with the Adani Group. 5. Many of these companies have a large majority of their shares invested solely in firms under the Adani Group. 5. This may mean that in practical terms, those companies may have worked their way around the SEBI mandate that requires at least 25% of the shares of a listed company to be in public shareholding. 5. This exposes these companies to a high risk of being delisted. 6. Pumped up demand. The preceding point also hints at deliberate pumping of the Adani stock prices through excessive buying pressure from companies that seem to be biased towards, or perhaps connected with, the Adani Group itself. 6. It is claimed that the delivery volume of Adani stocks may have been high because of possible wash trading, e. 6. Buying/selling of a share by the same or related entities to pump up the trading volume numbers. 6. Rumors regarding the involvement of the noted stock manipulator Ketan Parekh have also been raised in the Hindenburg report.